and welcome to a brand new video of Next Stock. I hope you're all doing well. It's been 2 weeks since the last report, so we're due for an update. In the last 2 weeks, the big news is of course the Silicon Valley Bank's collapse and the replication that will have on the stock market. So we will follow that closely going forward. We're going to start with the highlights, and some of the highlights include actually banks in the Canadian sector, so that's interesting. Let's start with Asana in the US, and they had a 34% year-over-year sales growth. Target rate for them remains at $27 as before, so there is an upside for Asana. Salesforce reported a 14% year-over-year sales growth. Target rate for them has been lowered to $201, so there is a slight upside for Salesforce. Docusign reported also a 14% year-over-year sales growth. Target rate for them has been lowered to $64, but there is still an upside for Docusign. Zoom reported a modest 4% year-over-year sales growth. Target rate for them has been lowered to $104. However, there is an upside for Zoom. All right, let's look at some other companies that reported. And now we're going to look at the Canadian banks that reported, all in Canadian dollars. Royal Bank reported a 16% year-over-year sales growth. 144 Canadian dollar is our new improved target rate, and there is an upside for them. TD Bank reported a 16% year-over-year sales growth as well. Target rate for them is 102 Canadian dollars, and there is an upside for TD Bank as well. Bank of Montreal reported 16% sales decline year-over-year, and our target rate has been lowered to $106 Canadian. And they are trading a bit higher than that at the moment. National Bank reported a 7% year-over-year sales growth. Target rate for them has been lowered to $96. And they're trading around that level at the moment. All right, let's go into the regular reporting. We're going to start with the US market and value stocks. ExxonMobil is number 1, JP Morgan is number 2, and Chevron is number 3. Here we are looking for high market cap companies with low priced earnings, so-called stable companies to have in your portfolio. When it comes to dividends, AT&T moves up to spot number 1 and Verizon moves down to spot number 2. Total Energies is a newcomer in spot number 3. They are replacing Conoco Phillips, who was in the list last time around. When it comes to growth in the US, XPeng is number 1, NEO is number 2. They had a 49% year-over-year sales growth, while the stock price had declined 69%. Li Auto is number 3 with 56% year-over-year sales growth, while the stock price had declined 36% year-over-year. Asana, who was in the top 3, is out from top 3. Interesting, all 3 companies in the top 3 growth, they are EV companies from China. So have a look on those. Here we are comparing sales growth for a company with its stock price growth for a company or year over year, and we're looking at the current date, and we make them into a huge list. So they ended up in the top 3. At the bottom of that list, we have Blackstone at spot number 1. Vroom is a newcomer, spot number 2. They had a sales decline of 78%, while the stock price also declined 91%. They are still considered pricey. Nvidia is spot number 3 because they have a high price to sale ratio. Snowflake, who was in the list before, is out from top 3. All right, that concludes the US. Let's go into the Canadian market. We start with the value stocks, and it's dominated by the banks. Royal Bank is number 1, TD Bank is number 2, and Bank of Montreal is number 3. Dividends in the Canadian market, Tourmaline Oil is number 1, Enbridge is number 2, and Keyera is number 3. Growth stocks in the Canadian market, Algonquin Power and Utilities is number 1, Kinross Gold is number 2, and Air Canada re-enters the list spot number 3. They had the 71% year-over-year sales growth, while the stock price had declined 8%. They are replacing Capital Power, who was in top 3 before. Pricey ones in the Canadian market, Franco Nevada is number 1, Wheaton Precious Metals is number 2, and Great West Lifeco is newcomer, spot number 3. They had a sales decline of 22%, while the stock price had declined 18%. They replace Tick Resources, who was in top 3 before. All right, and that concludes the report for this time around. Thank you so much for watching. If you like this videos, please like and subscribe so you don't miss out on the next one. And meanwhile, you can follow us on NextStock.yt just to see whenever there is interesting earnings that comes out. I will try to tweet it out, and you can follow it there. Little bit of a sneak peek before the report comes out in 2 weeks' time. Always gather your information before jumping ahead purchasing stocks. See you again soon. Thank you. Bye-bye.